Welcome to the Bay Insider with Amanda and Ying, where we talk about history, lifestyle, and real estate in the San Francisco Bay Area. Thank you for joining us and welcome to the Bay Insider. I am with Ying today. We are talking about the market update for Q2 of 2025. So we've got a lot of interesting information to go over and thoughts for the future. And I'll let Ying go ahead and kick us off.
Yeah, I can't believe half a year has already passed by. I don't know how you feel about it. I can't believe we're in July 2025. We're going to start looking at our Q2 year-to-date data. And as always, we're looking at the single-family homes and condos. Then we're going to look at the transaction volume for year-to-date. And then we go back to look at the historical trend for the full year, just to give you some perspective on where we are in 2025 compared to the previous years. One thing I'd like to point out is there's always a lagging in data. So what we see in the data I'm showing you right now doesn't reflect what's happening in the marketplace today as we see. So 3 months down the road, 6 months down the road, what we see today will be reflecting the data. Amanda and I will also explain to you what we see today and what our prediction is for the year.
Because, yeah, day in and day out, we're in the business talking to other agents, talking to potential buyers, talking to sellers, and there's a lot of intangible gut feeling information that you get from that, in addition to just the numbers that aren't actually showing yet on the charts.
Exactly. I'm going to start with single family homes, and those are medium price. You can see that our market peaked in 2021, 2022, roughly at $1.8 million. And that's a medium single family home. That meaning 3-bedroom, 2-bathroom, probably 1,700 square feet with 1 parking spot. And the range obviously could be anything like 1 million to millions and millions in the San Francisco market. Now, we took quite a bit of dive in 2023, about 13% drop in price due to the major interest rate hike. Then 2024, we recovered some, about 5%. And this year, so far, we recovered another 5%. So we're getting close to our historical peak, basically, based on the numbers. Price per square foot is more or less the same story. We dropped in 2023 and slowly climbing back up. Days on market has been 13 days, and that's fairly standard for San Francisco. We operate in a very fast moving environment. From the day property goes on market to the day it's in contract is generally less than 2 weeks.
Yeah, I mean, that's as a rule of thumb, it's kind of like 2 weekends of open houses, then you take offers, but it's been even quicker than that.
That's right. And because this is only median, right? For a popular property, it could just be 1 weekend. And, that's what we have been seeing in the past. However, as we said, things are changing. Amanda, do you have any comments on this?
No, I mean, I don't think there's anything other than what you've been talking about. I think it's pretty kind of standard recovery that we're seeing in the market. But as we go through the numbers, we can get more into our thoughts.
Yeah. So I'm moving on to the condo market. It's pretty much the same story, just a smaller scale. So our market peaked in 2021, and then in 2023, it dropped 9%, recovered 2% in 2024, and 3% year to date. Price per square foot, again, about $1,000, give or take, very minor changes. The days on the market this year to date, the median has been 28 days, but there's a wide range.
Very wide.
Very wide range, which we're going to cover in a little bit. Condo market is very different in San Francisco compared to single family.
Yeah, and I think that one thing that shows that quite a bit is if you look at this chart versus the one that we showed previous with the single families, they, in 2021, right, you see that over 12% jump versus in the condo market where that was
1 or 2%.
Yeah,
Yeah.
1 or 2%. So the fluctuation is not as great. Yeah, the demand for single family homes in San Francisco is very high because there's such a finite amount of them.
Exactly, which leads to something we're going to discuss in a little bit. During COVID, everyone was looking for space. Therefore, single family homes have been extremely popular. Now, the condo market has seen some recovery in this year because back to office and, economy rebound and the whole market rebounded. But compared to single family, condos are not as desirable as a category for a number of reasons, and we'll get to that in a little bit. So next, we look at the transaction volume. This one is a snapshot for same time every year for the past 6 years. So it's year to date, like basically half year for 2020 all the way through 2025. Keep in mind, 2020 was a strange year where we kind of missed one quarter in the first half of the year. Keep that in mind when you look at the data. So 2020 was very backloaded. We had the first quarter, nothing happened in second quarter, and third and fourth quarter kind of went crazy. After 2020's very low transaction volume, we kind of went crazy in 2021 and 22, and now we're back to more of a normal in last 3 years. You can see a steady increase, but more normalized transaction volume.
Can I ask
Normalized, but historically low. That just to show you how 2025 stack up year to date compared to the previous years. But that's only half a year. What's more meaningful really is the next chart where we show the full year numbers, because there you take the seasonality out of equation. And 2025, we're just assuming we double year to date numbers, which seems to be a fair assumption so far.
so
Um,
far, except
so
for a
far.
little bit of a slowdown that we're seeing, inventory.
We're
Yeah.
gonna hold that for
Yes.
another minute. Hold that thought for one more minute. What I was saying here is that as we talked over and over again, 2022 very low year just because COVID effect, and then the market kind of just went crazy 2021 22. Everyone was moving, and after that 2023 got to be the historical low for San Francisco in terms of transaction volume. I remember we looked at this one time before. Now I can't remember our conclusion, but this is a very rare that we have such low transaction volume for the city.
Yeah, I think historically when we looked beyond, 2020, going back 2019, beyond, it was definitely, over 5,000, I think, 5,500,
Exactly. I think 5,000
6,000
was
even.
was about the average we calculated in our 10-year trend. And
Mhm.
so this is 20%
Yeah, so
lower.
we're still incredibly low in terms of transaction volume.
Yes, absolutely. So our historical average is about 5,000. So you can look at those numbers, they are still below that, although we're slowly increasing. And even this year, I think for the first half year, we definitely see more inventories than what we have seen in the last couple of years. That's what has happened in the last 6 months. Let's talk about what we are seeing today, which is a slightly different picture than what the numbers show. What we see actually is single family segment is still doing okay. It's healthy in general. Most houses still getting sold fairly quickly, although I do see a lot more price reductions in recent weeks.
And also, I think this 261 active listings for single families with a median day on market of 39 days. This is a snapshot right now, correct?
Correct. Oh, yesterday or 2 days ago. Yeah,
Right, right.
that's the data. Right.
In this general time frame of the beginning of Q3. So 39 days on market is certainly more.
Right. So I do want to add another element to this, just so we understand. We talk about the seasonality in San Francisco quite a bit. We have a very strong seasonal market. So June, July is generally the first slowdown. And then the second one will happen in November, December. That's just how our market works. It's kind of expected to
Mhm.
see a slowdown in the market at this time of the year when everyone goes on vacation. There are not many listings on the market. However, with that many active listings with 39 days on the market, it is little concerning, meaning when those properties eventually get absorbed, the prices and the days on market will change from the numbers we just showed you.
And the other thing also, I think, to note with days on market and how all of these statistics work, a lot of times, a property may be taken off the market temporarily for a month and then brought back on as a new listing or with a
Correct.
different agent. And then when that property finally closes, it shows just a few days on market, but in reality, it was more on the market. So these don't always exactly directly relate once they're closed.
Absolutely. But on aggregate, this is just indicator of the market situation. So from that perspective, I think 39 days definitely is telling us that the market is very sluggish. But
Agree.
compared to condos, single family homes are healthy still. Condos, there are 653 active listings. That's about half of what we have sold for the first half a year. And
Yeah.
the medium days on market is 57. And, we just said we had 28 days on market. When and if those condos get absorbed, the numbers are going to change significantly. And, we won't see that for another 3 to 6 months, perhaps, but the numbers are going to drop as we absorb the inventory.
Yeah, definitely. The funny thing I was just thinking about, if you think about what's happening in the rest of the country, because definitely if you look, there's been articles, in major news outlets about the slowdown in the market countrywide. So actually, we're not as affected as some other areas are. And I would say 39-day on market, a lot of areas, even in their hottest markets, would be not too sad to see that number.
No, no, absolutely. You brought up a great point. In San Francisco, we are actually we're sort of in a bubble. Our market operate in a very different way compared to the rest of the country. The rest of the country, everywhere you see is there are more sellers than buyers, properties sitting for a long time, right? A whole lot of price reductions. In our market is generally okay, but their particular segments are, dealing with some difficulties. So one of this is District 9. When we see District 9, we mean South Beach, Mission Bay, that general area, SOMA. Those
Yeah,
are District
Buena.
9.
Yeah, SOMA has a lot of things fitting.
SOMA has a lot, right? So out of 653 active listings, about half are in District 9. And they have been on the market medium days is 67 days. That is very concerning. And we know in that market, a lot of properties have been sitting on market for, sometimes months and months with multiple price reductions and
And
still not being sold.
and I think another point is that there are a lot of people who have bought their condos not that long ago,
Correct.
because there was so much movement that took place, in those pandemic years, and then people realized their lifestyle or life was different and they moved, so there was a lot of movement. So a lot of these people who are trying to sell a property that they bought just a few years ago are, finding that they're not able to get even what they paid for it. So that's coming to realistic terms on the pricing of properties, I think, is also one of the reasons that things sit a little bit longer.
Absolutely. Because in that area, there are a lot of new construction as well. Most new condo construction happen in District 9. There are lots of new condo buildings like yeah, I won't name some, but a lot of high rise luxury condo buildings. So when people bought those condos at the peak, and now it's just then they realize maybe they want to live in a single family home, maybe they need to move to the suburbs. Or, for whatever reason, it just become difficult to sell because all those products are interchangeable. The substitution effect I'm talking about, that's your economics 101, right? When we're looking at single family homes, they are unique in nature in San Francisco. And that's how San Francisco is different from other areas as well, because each neighborhood is unique. A lot of single family homes are unique. They are all different. So there's no clear substitution effect. When it comes to condos, whether condo A or condo B, they are essentially the same or more or less the same. Therefore, there are a lot of substitutions. Then people shop, People can easily
And
shop.
people do not feel like they're in a hurry, right? So it's not
Right.
like, if I don't get this place today, I'm never gonna get a place like this.
No, there's always another one.
Supply and demand, supply and demand.
That's right. That's absolutely supply and demand issue going on over there as well. But just to sum that up, is that we definitely see some troubled areas in our marketplace. But that comes to a conclusion we also like to make is really the buyer's market now. Both Amanda and I have been at this for what, this is our 11th year now. And honestly, I now it's like, it's finally buyer's market, I guess, right?
Yeah, yeah, and I think, something else to keep in mind too, for those buyers that are out there looking, I mean, if there's a property that has been sitting on the market, talk to your real estate agent about, what is realistic, make an offer. Just see what you can make happen, because there's a lot more room for negotiation.
Absolutely. I still want to point it out that if it's a unique property, if it's good property in a great location, those properties still get multiple bids.
Yeah, there was one that my clients were interested in the other day that was listed at 1,395,000, that I think got maybe 15 offers and closed at 1.9 something. Yes,
Exactly.
that is still happening,
That's
and it
absolutely
always will in San Francisco.
always will. But there are definitely a lot more opportunities for buyers, especially in the condo market. The condo pricing has been depressed for a number of reasons. We talk about that. We covered several already, right? Because there are just lots of supply and they're all in the same similar neighborhood. And HOA fee is one thing we did not talk about earlier. The condos unfortunately come with high HOAs, especially the newer luxury condos. So that becomes a challenge for most people, right,
Yeah,
Amanda?
especially because the uncertainty of those HOA fees. It's not like you move in somewhere and that's set in stone. Number of different things like we've been seeing with the new ordinance or rules around balcony inspections and things like that, that are, causing HOAs to have to do large projects that they, maybe didn't have the reserves for. So there's special assessments that come up. There's also, I don't know what buildings it's going to affect, but did you read about the buildings that don't have the concrete buildings without enough rebar or something like that, that
No.
are, they may have to redo everything. So
Yeah.
I think there's more commercial buildings that are affected by that. But my point is that there are new things and requirements that come up that cause unexpected costs.
Right, right. Absolutely. What we have seen also on the buyer side is because there has been a lot of uncertainties in the marketplace, not necessarily interest rate, because interest rate has come down, right?
It did, yeah, like 0.75% just recently.
Yeah. So the interest rate actually hasn't been the main factor. It's more of uncertainty with everything else, jobs, the economy, and war, you name it, everything. So that's where a lot of buyers are hesitating, not sure this is the right time to pull a trigger to buy a house. But you can also argue because most people are sitting on the fence, it might be the best time to buy a house, right?
Yeah, yeah, definitely. I would wonder, with the immigrant population,
Yeah.
if there's a large percentage of people in the immigrant population right now that are choosing not to buy homes because
Oh,
of the uncertainty
absolutely. That's absolutely because you don't know how long
with
the
policies
visa,
and
yeah, anything's going to change. Before, you didn't have to worry as much. So this is more than the job element because another thing we want to talk about the job market here. Yes, we hear layoffs, a lot of layoffs. However, we also know San Francisco has a lot of hirings, especially AI related hirings. So all the tech employees, they're still highly employable. So it's less of a job issue. Where the job loss is in more traditional sectors where things change, right? Things change a lot. People being replaced by processes or AIs or outsourcing, many different things.
or
But
consolidation of companies. There's so much of that that happens, and then they just, cut down.
absolutely, absolutely. But overall, we haven't seen that much impact from the layoffs itself, but more of people's psychology related to layoffs. Would you agree?
Yes, I think a lot of it is psychology. I have been seeing a lot of job transfer sales, which I think is interesting.
Correct. That's true.
I feel like I've been seeing that more often.
Yes.
But yeah, I mean, I think as is the case a lot of the time, a lot of these things are psychological.
Yeah, no, that's true. It's always psychology. So the other side of equation of all that is the rental market is up. We were just looking at the data the other day. Basically, year over year, our rental market is up anywhere between 10 to 13%, depends on if it's one bedroom or two bedroom. And the historical high happened in 2020, let's say right before COVID. Right now, we're actually fairly close to that. Not quite there yet, but getting close to historical high. So what that tells me is people end up renting instead. People who could have bought decide, okay, why don't I just rent for now? Because they have to go back to the office. They need to be in downtown or nearby, and they just decide to put a purchase on hold.
And also, they may be starting new jobs. All the new
Correct.
employees coming into the AI, they don't want to buy a house right away. They don't know the neighborhoods yet. They
Yeah.
aren't sure they're going to be staying long term. So, yeah.
Uncertainty, right? That goes
Yes.
back to uncertainty, high level of uncertainty. But for people who are ready, who can buy a house and who's ready to buy a house, especially condos, that might just be the best time. Relate to that, we want to talk about the new law that's been passed this past Tuesday about ADUs. So the city has allowed ADUs to be sold as condos. Amanda, do you want to give our listeners a background of what that means?
Yeah, I mean, yeah, to understand what ADUs even are, I think some people
Yeah.
probably don't know what that is. So accessory dwelling unit. So a lot of times, people have been converting illegal in-laws, which we have tons of, especially out in the avenues, but in San Francisco in general. So they did work to speed this up a while ago, but now they've taken it an additional step and said, okay, if you do these ADUs, we'll allow you to sell that ADU as a condo. But that's only for properties that do this after May of 2025.
May 1st,
Yeah,
2025.
May 1st, 2025. But what that will do, I mean, the idea behind it, right, is that people who are, living in their house that have been there for a long time, but need to generate some kind of money from their home to be able to stay in the city and to also provide additional housing, since we have a housing crunch, they can take the equity in their home through a home equity loan or some other way, build one of these ADUs, sell it to somebody else, then they can take that cash and do what they need to with it. And then somebody has housing in
Yeah.
addition to that. So I think that's the reasoning behind it.
Exactly. And we talk about people being house rich and cash poor here.
A
All
lot
in
of
the Bay
that.
Area. That's a lot of us, right?
And that, yeah, there's a lot of that. And then there are a lot of people that, then they say, okay, I can get all this money from my house. I'll just move somewhere else, even though maybe I don't want to. Maybe I want to stay in the city. But the ability to, upgrade your living conditions in terms of cost of living and all of those things, they make that choice. So this may allow some people to stay and not have to make that choice.
Yeah, a lot of people actually don't want to move away. Those people are primarily people who have been in those houses for a very, very long time. They bought a house very cheap and have their family community over here. They don't
Hmm.
want to move. But this is just, one way of helping them. But the
Yeah.
question is, how do we implement it? Because to me, there's so many questions related to this. Like if it's in-law, like bottom ground level, garage
Mhm.
level, that's a little easier. But what happens if that's a backyard condo or backyard unit?
I don't see it as being a problem because we do that today. I mean, there are many, say, 2-unit condo associations where it is one house in the backyard and then the front house. It's a matter of documentation, writing up the condo map. I think it's just defining those spaces and not really any different than what we're already doing.
You're just talking about condo conversion process almost, right? For those single family homes, all of a sudden they got to convert into two condos. or single family home and a condo?
Well, I don't know that because I haven't read all the legislation. I imagine you have to be 2 condos, right?
Right. So
I don't think you can stay a single family home and then have a condo and sell it because I think they have to be
right, right. But you know, I mean, again, we don't know much about it. I'm
oh, we
just
don't.
thinking like, how do you price it, and what happened to the 2 meters? You have to update all the electrical or as a part of the conversion process.
Oh, I'm sure. I'm sure all of those things, and you probably have to have separate water meters and all of those kinds of things. And I think, you and I had talked about this before. How good of an idea is that for somebody if potentially they are diluting the value of their single family home by turning it into a condo? And I
Exactly.
think the final thought on that was, well, if these people are not wanting to leave, they're not wanting to turn around and sell their single family home, they really wanna stay there and stay there potentially multi-generationally, then it doesn't really matter, right?
Right.
That's
So for a second population, it might make sense. So we'll see how this unfolds. We don't
yeah,
know.
and I think yeah, anybody who is considering doing that, I think it's really important to talk to a real estate agent, maybe an attorney, certainly an attorney actually,
Yeah,
and figure out how much money you might be leaving on the table. What are your long-term plans and what
exactly.
makes sense for you, in the long run?
Yeah, it's not a small decision.
Correct.
Requires a whole lot of thinking and planning. Then one last thing we want to talk about is the Zillow versus Compass. I guess I put that way. It's really we have a lot of chats about Zillow's new policy that happened in May, I think end of May.
So Zillow has made a new rule that they will not display any active properties that had been privately marketed prior to going to public marketing. I think what we mean by that is any type of marketing to the public, like putting a sign in the yard, putting out a social media post, talking to potential buyers, those types of things prior to having all of that information logged into the MLS system. They give
Yeah.
you 24 hours to do that.
Let's take one step back. I think it would be helpful for us to go a little further back to see, where did this come from, why, what changes has been happening even after Zillow thing. I mean, it really comes from the clear cooperation policy, an AR, right? An AR adopted in was
Mhm.
it 2018, 2019, right? The idea of the policy is to create a more of an equal play field for all the listings and all the real estate companies, meaning like you are supposed to share information equally and publicly. I believe that's the philosophy behind the clear cooperation policy. However, some large brokerages, I guess we have to name Compass here because they are the largest. So basically, large brokerages start having pocket listings where they do private and exclusive for their clients, where they basically leverage on their size to say, well, maybe we don't need to market this property publicly. Maybe we can do it on our own in house. And that caused issues and, contradictory to the clear corporation policy. And Zillow went in to say, well, if you do that, you cannot publish on our site. Compass now is suing Zillow and then also going against NAR's clear cooperation policy. So, having said that, I don't know what that leads to. Amanda, you want to add your take on that?
I think it's a very complicated situation. I think there's a lot of ideas about what the motivations are behind either side wanting to do this. My personal opinion is that the information should be available for all agents to get access to because that is in the best interest of the client to get the information out there and fully expose a property to market. In that respect, I think it's good that they're holding their feet to the fire in this type of process. However, it's also, I don't think, altruistic in the way that it's happening because, Zillow is a platform where they, charge agents a large amount of money to become Zillow Premier agents and to feed them leads, buyer leads. And obviously, the more listings and more cohesive listings they have, the more buyers are going to come in and the more leads they can sell. But so I do also wonder, is Zillow powerful enough that them making this threat is going to stop it from happening? Because if it doesn't, then they've kind of made a bet where they may be shooting themselves in the foot a little bit. Because if they don't, and people start to feel like, well, I'm not going to be able to see all the properties that are available when I go to Zillow, that could lead people to stop going there, right?
Yeah.
Wouldn't you think?
Absolutely. So, I mean, it's a risky bet, but I'm still glad there is a voice,
Yes.
because otherwise it become monopoly. Then, in my mind, that's not good for market. It's not good for consumers, and
Correct.
it's not good for anyone outside the compass, really.
Yeah, it's competition, and this is not just in our industry. I mean, there's so many different industries that face these types of monopoly type problems, and there's so much consolidation that's gone on in the real estate market and in other industries. And yeah, personally, I don't think that it's the best thing for anybody.
Anyway, but we will keep you updated. So that concludes end of this segment. And if you have any questions regarding what we talk about, or if you think you're sitting on the fence and thinking you might want to buy, just want to talk about it, or even ADUs, let Amanda and I know. You know where to find us.
Yeah, for sure. And I think that, we'll continue doing these. And so if you think of things that we haven't covered in terms of data or information that you think would be helpful for us to try to cover, then by all means reach out to us, because we would love to, fine tune what we're providing to make it as useful to you as possible.
Absolutely. Well, thank you so much.
And we'll see you later.